Spring 2026 became the biggest stress test Dubai real estate has faced in years. Regional conflict, fear of a global financial correction, transaction volume contracting almost overnight, and thousands waiting for panic selling. But what actually happened surprised almost everyone. Period saw volumes contract by approximately 40%, a significant but controlled adjustment. Buyers paused, many moved into cash positions, and suddenly the market started asking the same question: where are the distressed deals? People expected discounts, minus 30, 40, maybe even 50%. But that wave never materialized. And this is where the data reveals a structural shift. 83.8% involved completed, ready-to-occupy apartments. Only 16.2% were off-plan resales. That tells us something critical. Buyers weren't chasing paper gains or flipping contracts. They were acquiring tangible, income-generating assets. For years, critics argued Dubai's growth relied on short-term momentum. But spring 2026 proved otherwise. Owners didn't panic. Even those holding from previous cycles refused to undercut the market. Why? Because the buyer profile has changed, and the market has matured. Why there were no panic? Look closer at the transaction profile. Nearly 38% of those apartments were sold with tenants already in place. That's not speculative capital. That's yield-focused investors, family offices, long-term holders. Since 2025, global liquidity had already been preparing for turbulence. Smart money reduced leverage early, accumulated cash, secured income streams. When fear arrived, owners weren't overextended. They could wait. In immature markets, uncertainty triggers forced selling. In mature markets, it triggers patience. And this spring, Dubai acted like a mature market. Two major changes, which brings us to two structural shifts that will define the next phase. First, financing. For years, Dubai mortgages were heavily weighted toward completed properties. Buyers had to wait for handover. Now, banks are beginning to finance off-plan projects much earlier in the construction cycle. This expands market access, increases liquidity. It's opening the door to a broader, more sustainable buyer pool. Second, residency. Dubai expanded access to the 2-year investor visa. Today, almost any fully paid residential property can qualify. Joint ownership structures now require roughly 400,000 dirham per owner. This lowers the entry barrier for global capital without diluting Dubai's premium positioning. It's not about flooding the market, it's about widening it strategically. Spring 2026 was supposed to expose weakness. Instead, it revealed resilience. Transaction activity slowed, but prices held firm. Distress inventory barely appeared. Over 84% of deals were in completed assets. Nearly 38% came with existing tenancies. Investors chose to hold through uncertainty. This isn't speculation, it's market maturation. Dubai passed the stress test, and that may be the most important signal for the next cycle. If you want real Dubai market analysis, not hype, follow us. We break down real estate through data, investor psychology, and long-term structural trends.